please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, I was looking through the old interview we had with you after your results, and the only point of vulnerability appeared to be the margins. Can you give us any more color? I mean, the H-1B visa costs, as well, any drop in utilization, because you have a lot of a bunch of newcomers in your company.
Sure. See, for the full year, we had said that we will maintain margins as it was last year. There will be quarterly variations. We have planned for a reduction in utilization in the earlier part of the year. So, in fact, this current quarter we are in, we've said there will be a reduction in utilization. But that's almost kind of winding up on supply to satisfy demand for the later part of the year, right? Rupee has been friendly to us so far.
Yes.
That was not something that we had budgeted for, but, you know, a little bit of hope was there for that, but not budgeted for. So it's been friendly, and that, you know, for 2018 will not impact EPS, because our hedge policy is meant to cushion against short-term changes, but it will have an EPS impact from 2019 onwards.
Okay.
Okay. The last time we spoke with you, Srikrishna, you mentioned that for the full year for CY18, you have a 10 to 12% revenue growth target. And you did say that that could be slightly, on the conservative end, or at least that's what the street implied. Do you think, given how good the first quarter was, perhaps you could even beat that target by the end of the year?
So what we've said is that if there's a change, we will, provide a revised guidance at the end of H1, which is our quarter two, which is coming up shortly. In a month from now, roughly, we will be announcing results. So yes, the first quarter was better than expected. We still expect Q2 and Q3 to be the most robust quarters for the year. And that's what we said then. And so if that does turn out to be the case, then we should see better numbers ahead.
Can you give us some color on deal wins in the past few months?
Sure. I mean, I can only talk about deal wins as it was at the end of last quarter. I can give a broader color, but not specific numbers. We don't make announcements between the quarter.
Use an adjective. Was it better than you thought?
Well, I wouldn't say that, because we don't kind of deal wins, especially as it pertains to new clients. It tends to be spiky through the year.
Okay.
So I like to kind of judge it over the course of the full calendar year period. And quite often, deals kind of get to sign in a rush towards the end of the year. Every year, our Q4 tends to be the best. And so without looking at Q4 of the year performance, it's hard to judge for the full year. What I can say for sure is two things about our deals. One is our pipeline is very strong. Two is that, apart from a strong pipeline in new customers, we have a bigger than ever pipeline among existing customers. So our existing customer pipeline is really ballooned to become quite material.
Okay. The last time, at least in the last few quarters, your SG&A costs as a percentage of revenues had risen because of a few investments you guys had made, and that impacted margins a bit. Going ahead, since those costs may not, reoccur, do you think margins could move up further?
Well, so there are some cyclicalities every year within different, quarters. For example, in Q1, we have costs pertaining to H-1B application fees. In Q2, we have the actual H-1B fees that come in. So we will kind of, I think, recover some margins during the latter part of the year. So, right at the beginning, I said it's our goal to maintain full year margins at the same level as last year full year margins. Our Q1 was lower than last year full year margins, so it will improve during the rest of the year.
Okay.
It will improve in part because our SG&A as a percentage will be lower.
Okay. What about BFSI, Srikrishna? Usually the conventional knowledge is that when interest rates rise, that segment could wobble a bit.
Actually, we have a lot of capital markets customers, and especially on the buy side, and they actually tend to make money when interest rates rise.
Okay.
So it's not actually. So our customers actually stand to benefit, at least for part of their portfolios, and they're not a type of industry which will immediately open pockets and it will translate to higher spend, but it's not a negative certainly for our industry.
Okay, one final question then. The growth in the North America geography was not so good for the last couple of quarters. Has there been any improvement there, not just for your company, but for the industry in general?
We expect our North America growth certainly to be better. And if you take a longer view, 2-3 years, our North America average has been very robust, and we expect our NA growth to come back to those historical averages. In terms of macros, North America has been very good. And in fact, the projections for Q2 for North America are that it could be the highest ever GDP growth in the last 15 years. That there are at least some estimates which top GDP growth at 5.5% for Q2, which will be that's a number that hasn't been seen for about 15 years or so. So the macros are very strong in North America.
Oh God, 15. That means 2003 really. Okay, good for you. Thank you very much, Srikrishna, for joining us and giving us some color